Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera kepada semua. Terima kasih kerana sudi menghadiri sidang akhbar pada pagi ini mengenai prestasi ekonomi negara pada suku kedua tahun 2024 dan juga perkembangan moneteri dan kewangan oleh Bank Negara Malaysia dan Jabatan Perangkaan Malaysia. Bersama saya ialah Ketua Perangkawan Malaysia yang berhakir Datuk Seri Dr. Mohd Uzir Mahidin. Sebagaimana kita sedia maklum, Jabatan Perangkaan Malaysia merupakan agensi rasmi yang mengumpul dan menerbit statistik KDNK ataupun GDP negara. As per our usual practice, please allow me to continue the presentation in English for the benefit of our international audience. Global growth in the second quarter of 2024 remained moderate, weighed down by high interest rates. Nonetheless, regional exports continued to recover, supported by both electrical and electronics and the non-EID goods. Inflation continued to trend downward in the advanced economies. And let me now hand over the presentation to Datuk Seri Dr. Uzir to announce Malaysia's GDP performance in the second quarter of 2024. Over to you, Datuk Seri.
Terima kasih, Gabenor. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera. Pada suku kedua 2024, ekonomi Malaysia berkembang pada kadar yang lebih tinggi sebanyak 5.9%. Peningkatan ini didorong perbelanjaan isi rumah yang tinggi dengan pasaran pekerja yang positif dan sokongan langkah-langkah dasar yang lebih besar, pertumbuhan ekspor barangan dan ketibaan pelancong yang semakin meningkat, serta aktiviti pelaburan yang lebih kukuh. Dari segi pertumbuhan suku tahun ke suku tahun pelarasan musim, KDNK menunjukkan peningkatan momentum pertumbuhan yang lebih kukuh, iaitu 2.9%, lebih tinggi berbanding 1.5% yang dicatatkan pada suku pertama 2024. Berdasarkan pertumbuhan bagi sektor pengeluaran, pada suku tahun kedua ini, sektor services telah meningkat sebanyak 5.9%, sektor pembuatan meningkat 4.7%, sektor pertanian meningkat 7.2%, sektor perombongan 2.7% dan sektor pembinaan 17.3%. Manakala di peringkat demand ataupun permintaan, pada suku kedua ini, penggunaan isi rumah, household consumption meningkat sebanyak 6.0%, pelaburan private investment meningkat sebanyak 12.0%, public investment meningkat 9.1%, manakala public consumption meningkat sebanyak 3.6% dan pada suku kedua ini juga berlaku turnaround net export daripada negatif 24.5 kepada peningkatan sebanyak 3.4%. In the second quarter of 2024, the Malaysian economy advanced by 5.9%. This was supported by higher household spending and amid positive labour market condition and larger policy support further pick up in export goods and tourist arrival, as well as a robust expansion in investment activities. On a seasonal adjusted quarter-on-quarter basis, GDP show a stronger growth momentum of 2.9%, higher than 1.5% recorded in the first quarter of 2024. On the expenditure side, domestic demand was driven mainly by private sector spending. Private consumption recorded higher growth supported by positive labour market conditions and larger policy support such as payment of sumbangan tunai rahmah, withdrawal of employees' provident fund account 3 and Budi Banani. The growth of household spending was attributed to higher consumption in food and non-alcoholic beverages, transport and restaurant and hotel. The growth in investment reflected robust capacity expansion by businesses as well as continued field asset spending by government and public corporation. Meanwhile, net export registered a positive turnaround due to the stronger export recovery amid higher external demand and global tech upcycle. On the supply side, most sectors recorded higher growth except for mining sector. The services sector continued to expand with stronger growth in both consumer and business-related services. The favorable performance was attributed to the wholesale and retail trade, finance and insurance, and transportation and storage subsectors. The significant increase in manufacturing sectors was attributed to export-oriented industries such as petroleum, chemical, rubber and plastic products, and electrical, electronic, and optical products. Furthermore, the domestic-oriented industries such as non-metallic mineral products, basic metal and fabricated metal products, as well as transport equipment, other manufacturing and repair also increased in this quarter. Meanwhile, the strong growth in the construction sector was underpinned by higher activities, particularly in the civil engineering and special trade subsectors. Growth in the agriculture sector was mainly driven by stronger production in oil palm and supported by fishery output. However, the mining sector recorded a lower growth following a production disruption in oil and gas subsector in the month of May. In the second quarter of 2024, the current account balance of payment recorded continued surplus of RM 3.0 billion or 0.6% of GDP. This was underpinned by surplus in good account and improving export. The services sector showed favorable performance with a lower deficit of RM 4.9 billion. This improvement was mainly due to a higher surplus in travel, which stemmed from increased spending by foreign tourists in Malaysia and a higher surplus in manufacturing services. However, the primary income account recorded a wider deficit, mainly owing to higher earnings by foreign companies in Malaysia, primarily through dividend paid to parent companies. Meanwhile, secondary income account returned to deficit. On the investment side, FDI recorded a higher net inflow of RM 9.1 billion during the quarter. This inflow reflects higher debt instrument and equity injection amidst outflow in reinvested earning by foreign firms. These investments were channeled mainly into the manufacturing sector, followed by services, predominantly in information and communication, and also wholesale and retail activities. The FDI were primarily from Japan, Singapore, and Hong Kong. In the meantime, direct investment abroad outflows registered a lower net outflow of RM 5.3 billion during this quarter. The main sector was services, followed by mining and quarrying, and construction. Canada and the Cayman Islands and the USA were the main destination of PIA. Thank you. Let me now hand over back to the Governor. Thank you.
Thank you, Datuk Seri Dr. Uzir. Let's move on. The external and domestic leading indicators point to sustained growth prospects for the Malaysian economy as we move forward. If you look at the left panel, the pickup in global orders will provide supports to exports. A higher value of construction projects awarded will translate into higher domestic activities going forward. And on the right panel, better business sentiments also suggest further confidence in the overall economy. With a strong performance of 5.1% in the first half of the year, we are of the view that growth for the whole year in 2024 could be closer to the upper end of the 4 to 5% forecast range. Household spending will remain the anchor of growth for the rest of this year, with continued expansion in employment and income, as well as larger policy support. And of significance, strong investment activities amid ongoing progress in the multi-year projects and favorable financing conditions, all this will continue to support growth. And from the external front, continued expansion in external demand will also lead to higher exports and tourist arrivals. Turning to Malaysia's external performance, Exports is projected to expand further this year, driven by the improving external demand, global tech upcycle, and also higher tourist spending. Global semiconductor sales is expected to grow by 16% this year. This recovery in global semiconductor sales will be led by the memory segment, followed by logic chips. And this will augur well for Malaysia's E&E exports, given our established position in the global E&E value chain, notably in the logic chip segment, which account for almost half of our semiconductor exports. Meanwhile, travel receipts increased further to 22.4 billion ringgit in second quarter this year, or an annual growth of 37%. In particular, tourist arrivals from China and India have been forthcoming, and this is supported by the visa exemption measure that was introduced recently. In second quarter this year, tourists from China improved to more than 690,000 arrivals, or around 96% of the 2019 levels, while arrivals from India were close to 325,000, or about 165% of what we saw in 2019. Moving forward, travel receipts are expected to increase further, and this is driven by higher tourist arrivals and spending per capita, supported by the visa exemption for China and India tourists, and also the expanding flight network and capacity. Consumer spending remains a key driver of growth, and this is supported by the continued wage expansion and employment growth. Cash transfers, for example, the STR and the Adil Fitri special financial aid for civil servants, and the EPF withdrawals provided further lift to private consumption growth. And moving forward, consumer spending is expected to improve, and this will be driven by sustained positive labor market conditions, sound household balance sheets, and targeted policy measures. Importantly, growth was further supported by strong investment activity in both structures and machinery and equipment. Overall, investment registered a higher growth of 11.5%. First quarter, it was 9.6%, and this is supported by implementation of new and existing projects and the supportive financing conditions. And this is reflected in higher construction activities in both the public and private sectors during the quarter. And going forward, investments will be supported by further progress of implementation of key infrastructure projects and realization of approved investments. Infrastructure projects such as the ECRL, the Pan-Borneo Highway, and the Johor Bahru Singapore Rapid Transit System, the RTS, are actually progressing very well. And investment intentions remain forthcoming after the record high approval last year in industries such as E&E and ICT, including data centers. And importantly, between 2021 to first quarter this year, 77% of manufacturing projects are at various stages of implementation. So this is among the highest level of realization. And overall, the economy is expected to expand closer to the upper end of 4 to 5% range, but of course remains subject to risk from both external and domestic factors. The downside risk could stem from weaker than expected global growth, further escalation of geopolitical conflicts, and lower than expected commodity production. On the other hand, growth could be higher due to greater spillovers from the global technology upcycle and more robust tourism activity. In addition, faster implementation of existing and new investment projects would also lead to more robust investment activity and overall growth in the economy. Now let me turn to inflation. Both headline and core inflation edged up during the quarter, reflecting price adjustments by firms during the festive season, several policy measures by the government, as well as idiosyncratic price movements. Headline inflation increased to 1.9%, was 1.7% in the first quarter, and this mainly reflects the lag effects of adjustments to administered prices introduced in the first quarter, and this included the higher water tariffs and service tax on electricity bills for high consumption users. Core inflation also increased slightly to 1.9%, and this is largely driven by higher inflation in information and communication services, following price adjustments by several streaming services companies in May this year. It is worth highlighting that as of June 2024, the impact to inflation from higher diesel pump prices in Peninsular Malaysia has been rather limited, with little evidence of spillovers to the broader CPI prices. Notwithstanding this, inflation is expected to trend higher in the second half of the year amid the recent rationalization of diesel subsidies. The impact would, however, remain manageable, given measures by the government to minimize the extent of cost increases. Headline and core inflation is projected to remain within our earlier forecasted ranges of 2 to 3.5% and 2 to 3% respectively. And having said that, headline inflation has remained modest at about 1.8% during the first half of the year, and we believe that it is not likely to exceed 3% for the whole year as a whole. Bearing further shocks. Of note, the outlook remains contingent on further domestic policy measures, particularly on fuel subsidy rationalization, as well as risks from external developments, including geopolitical tensions and climate change, which could drive up global commodity prices. On the downside, lower domestic inflation could result from weaker than expected global growth. This may lead to both lower commodity prices and slower demand conditions due to weaker external demand. Turning to monetary policy, the MPC maintained the OPR at 3% at the July meeting. At the current OPR level, the MPC deemed that the monetary policy stance remains supportive of the economy. Our baseline forecast remains for Malaysia's growth to sustain its strength, supported by resilient domestic expenditure and continued improvement in exports. And as expected, we will see higher inflation in the second half of this year amid the recent diesel subsidy rationalization, but the increase in inflation will remain manageable. This is given that measures are in place to minimize the impact of the diesel subsidy adjustments on business costs. These key structural policies are crucial to be implemented amid a favorable domestic economic environment, further bolstering economic stability and sustainability. As these policy changes will influence our outlook, our focus remains on assessing their short and medium-term impact on domestic inflation and growth. As always, our monetary policy will remain forward-looking and data-driven. The MPC will continue to assess evolving conditions and the implications on the inflation and domestic growth trajectories going into 2025. The MPC will ensure that the monetary policy stance remains conducive to sustainable economic growth amid price stability. Let's move on to ringgit now. The ringgit has been appreciating as of late, with financial market participants expecting imminent policy rate cuts from the US Fed Reserve. This has softened the US dollar and elevated pressure on regional currencies, including the ringgit. With these latest developments, the ringgit has now appreciated year-to-date by 3.1% against the US dollar. Globally, the monetary policy path is shifting towards central bank easing, but it is important to acknowledge that financial markets remain susceptible to economic developments, including growth prospects and any divergence between market participants' expectations and central banks' actions. Other sources of volatility also remain, including the undercurrent of geopolitical tensions, which continues to weigh on investor sentiments. Nevertheless, the domestic landscape remains positive, and despite this shifting external outlook. A narrowing of interest rate differentials with the US would be conducive to inflows, especially given Malaysia's positive economic prospects. Furthermore, the coordinated actions between the government and Bank Negara Malaysia, which has already facilitated a better balance of flows, will continue to cushion pressures on the ringgit. In April this year, The bank rolled out the pilot fast-track pre-approval framework known as the Qualified Resident Investor or the QRI program, and this is to reduce frictions for corporates who repatriate and convert their foreign currency funds from overseas investments and seeking to reinvest abroad when the time comes. This is to ensure two-way flows in the forex market. The outcomes of the pilot were encouraging, whereby more than $1 billion additional inflows were seen entering the domestic foreign exchange market. And these additional flows have helped to provide support to the ringgit's performance, contributing to the recovery of the ringgit that we have observed in recent months. And in light of this, we are pleased to announce that from now until 31st December this year, this pilot QRI program will be expanded to accept applications from eligible resident corporates who have outstanding direct investment abroad assets of RM 1 billion and above. Further information about this program can be found on the Negara Malaysia's website. Moving on to the bond market, the yield on 10-year Malaysian government bonds remain relatively stable on investor inflows ahead of financial market expectations of the US monetary policy easing. And on equity markets, Malaysian equities benefited from improved earnings prospects and rising confidence in the economic outlook. Let's move on to credit. Credit growth increased to 5.4% in the second quarter of this year, driven by expansion in both businesses and also household loans. For businesses, outstanding loan growth increased to 5.6%. It was 5.1% in last quarter. And this is driven by higher growth in both investment-related and working capital loans. This stronger growth was observed in the construction and manufacturing sectors. For households, outstanding loan growth remained forthcoming at 6.2%, similar to the first quarter, reflecting the sustained demand for loans, particularly for the purchase of houses and also cars. Financing by banks and DFIs continued to support the SME's business needs in the quarter two this year, with outstanding financing grew at an annual rate of 9.3%. This is much higher than the first quarter at 6.6%. In the second quarter as well, we saw double-digit growth in financing disbursement, and this is driven by the demand for working capital. The approval rates continued to be sustained at a high rate, indicating banks are meeting strong financing demand across all sectors, particularly in agriculture and the construction sector. The banking system continued to play an important role in supporting growth during the quarter, owing to their strong financial position, including robust levels of capital and liquidity buffers. Banks remain well positioned to support the financing needs of the domestic economy. The quality of business and household loans remains sound with stable impairment ratios. Newly restructured and rescheduled loans also remain low, and this has been supported by the prudent loan affordability assessments and provisioning practices by banks, which help ensure that banks have sufficient buffers to absorb losses. In summary, the Malaysian economy expanded by a faster pace of 5.9% in the second quarter of 2024, driven mainly by stronger private expenditure and further recovery in exports. With a strong growth momentum going into the second half of the year, growth in 2024 would likely be closer to the upper end of the 4% and 5% forecast range, although there are risks to the outlook from both external and domestic factors. Meanwhile, headline inflation is expected to average between 2% and 3.5% this year. With that, I've come to the end of the presentation.
Gardenia Puas memperkenalkan kepuasan. Nikmati kepuasan hari ini dengan ban ayam lada hitam kami. Gardenia Puas.
Di era digital, pemasaran bukan hanya tentang penjualan semata-mata. Penceritaan menarik,